So good morning, everyone, and welcome to our session today, Unlocking Potential for Your Business Through Diversity, Inclusion and Sustainability. My name is Tony Greenham. I'm the ESG Director at the British Business Bank, and it's my pleasure to just welcome you to this session and open with a few remarks to set the scene. Unlocking Potential is one of the 4 key objectives of the British Business Bank, and by which we mean that we think it's critical that entrepreneurs have access to the finance they need, regardless of who they are or where they are across the nations and regions of the UK. And sustainability is also one of our key priorities for building a modern green economy in which we can all thrive. And we can see that there's many reasons why these issues are increasingly important to business. We see that from our point of view, we see that diversity and inclusion are important for 2 different reasons. Really, is that there's plenty of evidence that shows that businesses that have greater diversity within them, particularly in decision-making bodies, make better decisions. They have more experiences, more talent to draw on in being able to run their businesses wisely. So it's the G in ESG, the governance is improved through inclusion and diversity. That's really valuable for not just social justice, but actually the performance of businesses as a whole. And the second reason is the one that I just mentioned about unlocking potential. We feel it would be, there is currently, the country is not making the best of all its talents, is not making the best of all the potential opportunities that we can have to build a prosperous and inclusive community. So making sure that we broaden access to finance, to business opportunities, to people from all walks of life, from all areas of the country, all genders and ethnicities, is really vital to the success of British business. So that's our view. That's why this is important to us. And actually for businesses, there's a sound case for thinking more about sustainability. And we've seen this in the work we do with working with over 200 delivery partners to finance over 100,000 businesses. And that is that there are increasingly customers are interested in businesses that have good performance on sustainability. I was helping my son, who's a student, last night to find some insurance for his kit in his student halls. And the one that we came across, we saw was registered as a B Corp. So that's businesses which are accredited as having a high sustainability performance. Now that's of great interest to me, as given my job, but my 20-year-old son, that really mattered to him too. And this is what we see as increasingly younger consumers. They want to know the businesses that they are buying from are doing the best for people and planet. The same is true of employees and workers. Surveys show that workers are increasingly keen on knowing about the sustainability of the businesses that they work for. If you sell into a supply chain as a small business, the large corporations are also raising their game on the sustainability of their supply chains, the carbon emissions and impacts on nature, as well as wanting to know that the businesses that they buy from are also performing well on inclusion and diversity. And then last but not least, providers of finance are also asking these questions. And so businesses want the best chance of access to growth in consumers, of attracting the best talent, of being able to sell into supply chains and being able to get funding on favorable terms, then performing well on sustainability, paying great attention to being an inclusive business, encouraging diversity within your business. These are all key critical success factors for the future. And so really delighted to be having this session today. And it gives me very great pleasure to introduce Helen Oldham of Lifted Ventures, who is going to deliver a keynote talk for us. So I'll hand over to Helen. Welcome. We're really looking forward to hearing from you.
So thank you so much for that introduction, Tony. And Lifted Ventures really pleased to be working with the British Business Bank in uncovering all the issues behind unlocking potential and looking at what we can do together. I'm just going to get my screen up. So, hang on a second. Just going to toggle back through those slides. Here we go. So, we're really looking forward to this session this morning. It's going to be very interactive. So for those of you who have got your cup of tea and tuning in today, just a flash warning that we're going to be asking for you to participate in the session between now and the close at 11:30. So we're going to be running 3 live polls. So watch out for the questions which come up onto your screen later, and an interactive Q&A. So hold those questions as we go through the session. We're going to open up to all of our participants to answer your questions at the end of the session. So Tony was talking very much there about how ESG can underpin performance, and I'm going to concentrate unashamedly on the diversity element of ESG in this starting commentary, because we know that that, as Tony said, underpins good decision making. And in fact, Forbes actually said that having diverse teams means that teams make better decisions in 87% of cases. So just a little bit of background about Lifted Ventures. I know some of you are familiar with Jordan and myself. We are the ex-leaders and founders of North Invest and Fund Her North. We grew those networks to being 170 angels in the North Invest environment and over 50 in the Women Angels of the North environment, helping to leverage £45 million worth of early stage investment, and became the second most active partner for the Innovate UK Investor Partner relationship. So we have taken everything that we've learned via those 2 organisations and condensed them into our new venture called Lifted Ventures. It's an early stage investment connector, but very much focused on creating an environment where everybody can access that early stage funding. So that's people from all backgrounds. We're looking to break down those barriers that mean that everybody can access funding. And we know that that's going to take a combination of education, importantly, community, and also consultancy. But most importantly, we actually want to make sure that funds land in the hands of those founders who need that money to grow their businesses and grow the UK economy. So we're on track to build a network of diverse investments executives across the UK, because we know that they are more likely to back diverse founders. But we know it's very much a community effort which is going to make the difference. And just as a quick bit of interest, the reason why we called ourselves Lifted is because a high tide lifts all ships. And together we want to create that community that is the high tide for diverse founders. And hopefully all of you will be joining us in that mission through today's information and today's session. So why do we exist? These numbers are not a surprise. They've been pretty well promoted over the last few years, but 75% of investment still goes to the south of England. Sadly, 40% of VC money still goes to female-led or co-led teams, and that's not shifted much in the last 5 years. I am going to go on to say what is shifting, and there are some positive signs, but the overall impact is still the same. And then when you start building into the intersectionality of ethnic founders, you can see some pretty stark results there. If you are a Black founder, then you are unlikely and not nearly as likely to be getting the funding as you would be if you were a white male, and 0.02% goes to Black female founders, which is a fact that I found particularly stark. And then we're also very interested just in that background piece. So 43% of investment goes to teams where one founder went to an elite university. Our values are very much around doing the doing. So we do want to open up the conversation as we're doing today, but very much focused on outcomes. So actually ensuring that we are providing those connections that ensure that diverse founders get that early stage investment. And we've put on here, we're Northern Lasses. So we always, whilst we always think globally, we'll always have a regional lens too. And we work across both those 2 environments. And lastly, we know that community is going to be greater than any one individual organisation. So I was very keen to share some of the research that the British Business Bank put together as part of their Finding What Works insights last year. And they pretty much start off by saying what we all know already, you know, more and more as we are entering a faster paced digital age than ever before, driven by AI. VCs are the kingmakers. They're the ones who decide who goes forward and who does not, and therefore the way they behave is increasingly important. We also know, and Tony's given some stats, I've got some more coming up as well, that we know that diversity can improve financial performance, and that's for the portfolio level, but also within individual organisations, and that came from the Harvard Business School. It's the fact of life, and we probably all behave a little bit like this unconsciously, is that we tend to gravitate towards other people like ourselves, and that happens within investment communities. And we know from the Invest in Women Code that warm introductions has a big part to play when it actually comes to landing investment. If you get a warm introduction, you're 40% more likely to be successful. So that's an increasingly important part of how we can change the outcomes. And lastly, we know that the way that VCs behave in terms of outreach, pipeline building, and their investment committee decisions actually help them in attracting a high quality, diverse team to their organisations and helping that diversity to progress to through the organisation into those important investment committee roles. So I was very keen to take this moment, and certainly Jordan and I have done since we started with Lifted Ventures, in thinking we've launched at a time that came just after Alison Rose standing down. And what does that mean for venture capital? What does that mean for the early stage investment community? I feel that there is a big onus on us to continue the work, as I know the British Business Bank and NatWest are still doing, but how do we make sure that that legacy continues? Well, it's good to see that 200 signatories of the Invest in Women Code now exist, and the government have made a commitment to strongly encourage others to join. I know there was a plea for them to make it mandatory, which they stepped one step back from, but they are saying they strongly encourage every VC to join that now. We know that the number of women launching businesses has increased by twofold since 2018. And that women are predicted to hold 60% of the UK wealth by 2030, all of which are factors which show that there is a shift coming in terms of systemic change, but sometimes our processes and our thinking need to catch up. And lastly, at a recent life sciences event, I was supported by Bowhurst in uncovering the fact that actually in life sciences, there has been a significant increase in capital flow to female founders, and that 30% of all VC investment went to female founders in that sector last year. The British Business Bank also spent some time looking at what's happening at the very beginning of the pipeline. So what's happening in terms of first-time equity deals. So these quite often are going to be angel-backed deals or very early pre-seed or seed deals. And you can see from the statistics that are coming through here that change is starting to happen at the beginning of the pipeline. So in 2022, 13% of all first-time deals went to female teams, 10% went to ethnic minority teams, and all female teams actually received 6% of first-time investment. And you compare that to the oft-used data around 2% of VC investment going to female founders. All ethnic minority teams received 19%, and teams with at least one female founder, so that's the co-led stat that I shared earlier, accounted for a record 27% of deals. And that has gone up 10% since 2012. And again, you compare that to the overall environment of 14% going to co-led teams. So you can see at the beginning of the pipeline, things are changing, and their share of investment reached 15%. So it's incumbent upon us to make sure that those changes continue as we work through the pipeline. Very quickly, the things that we know make a difference, there are three. These are things you've probably heard before, but making sure that diversity is promoted at the top of all investment organisations, and particularly on those investment committees. making sure that outreach and inclusion are very much tenets on which investment pipeline building is built, and also making sure that accountability happens through data sharing are the three main findings from the work last year. And then lastly, as I come to the close of my part of the introduction here, these are the things which we strongly believe at Lifted Ventures will make the biggest difference. So this is our personal commitment post Alison Rose, but I also throw this out to the audience. Are these things that you were prepared to back? What would you be prepared to commit to today to continue the work that Alison Rose started? So the first one is targeted and focused groups like Lifted Ventures, like Cornerstone Partners and many others are necessary. And that's because research shows that having close-knit circles of people like you lead to measurably improved career outcomes. And we also know that the UK BAA research showed that women angels are more likely to back female founders. So there is a place for focused groups who are making a difference in this space. But that doesn't mean that organisations like ours are criticising everybody else. Sometimes I think there's a perception that there's finger pointing at other organisations because we're doing things differently. That's not the case. Collaboration is really what's going to underpin a big changes in this environment. So the more we can all work together in sharing deal flow and making sure that we share best practice, the more we can accelerate change. We know that all networks and funds need to create diversity in their leadership teams and their pipeline, and that greater representation on those investment committees are going to make quite a big difference to outcomes, as well as embedding that broadening of outreach activities. But point 5, I think, is one that needs to come up the agenda considerably, and that is that allyship is what's going to create the broadest outcomes and the strongest outcomes. And I know from having looked at the Lean In and McKinsey and Company research that when men actively challenge bias, intentional and unconscious bias, they can considerably change outcomes and create a more equitable workforce. So we need to encourage everybody to become those allies for us, to have the courage to do that and feel supported in doing that. And that needs to become part of the work that we're doing. And lastly, we need to talk about business results. We know from Tony's introduction and from some of the stats that we're going to hear later that gender and ethnically diverse companies are 35% more likely to perform better, and that 70% diverse teams are 70% more likely to capture and penetrate new markets. So these are sound business decisions. This is not about suit du jour or something that's a la mode at the moment. These are things that are going to increase the performance of your portfolio and the organisations that you work alongside. So that was a little taster of what's going to come up in some of the discussions coming now. So I am going to hand over to Jordan now, who is going to pick up for the next part of the session.
Wonderful. Thank you so much for that, Helen. That was a fantastic opening, and thank you very much to Tony as well. Good morning, everybody. I'm Jordan Dargue. I'm one of the co-founders of Lifted Ventures, and today is all about unlocking that potential. Now, before we go into our panel session this morning, where we'll hear more from Helen, I just really want to caveat some of the key points that have already come out this morning before we launch our first poll. And some of the key points that would really come out there that really are staggering is that we are starting to see a fundamental move forward. But I can remember, I think it was about 6 months ago, Jess Jackson, who's actually on our panel this morning, created a fantastic LinkedIn post which highlighted the need for more to be done, because as obviously funding and support goes into a wider stream of early stage businesses, which is across, male-led found businesses, we've got to ensure that we're continuing to strive to do more so that we keep that statistic, that levelling up happening, and keep raising those percentages that Helen's highlighted there. And this morning, we're going to really start to fundamentally look at what some of the venture capitalists are doing in support of diversity, inclusion and sustainability, and actually how we can all work together more collaboratively, as Helen has mentioned there, to ensure that positive progress is made throughout. So before we do that, I am going to launch our first poll of the morning. And we're going to be thinking about, obviously, some of those barriers. So the first poll question this morning is, how do we break down the biggest barriers to investment? So our team at the back end is going to launch that poll now for us. And we'll have 30 seconds to make our decision on how do we break down the biggest barriers of investment. And there will be three answers, to choose from. So we've got, I would say, another 20 seconds left. I just want to double check. Can everybody see those polls okay? Okay, we've probably got about 10 seconds left on that. Okay. And Xavier, shall we try and gather those poll results so we can see what came out? Okay. Fantastic. So 42% have said that investor readiness, education and tailored outreach is obviously the biggest way to break down some of those barriers to investment. Very closely followed by increased diversity within investor networks. And we're going to talk a little bit more about that this morning as well. And then finally, promote a transparent funding process. And again, we're going to hear a little bit more about that. So that is our first poll done this morning. So we're now going to head over to our panel, and I'm delighted to welcome to the stage George Menzer from Sure Valley Ventures, Jess Jackson from Praetura Ventures, Natalie Boswell from Lloyds Bank, and also Helen Oldham of Lifted Ventures. So good morning, everybody.
Morning.
Hi.
Morning, everyone.
There's Natalie. Fantastic. Wonderful. Okay, so the session this morning, we're going to be really starting to consider, looking at how attracting investment and why diversity, inclusion and sustainability really matter. We're going to be looking at tips and strategies to help some of the founders in the audience this morning understand really what investors are looking for, but ultimately why it's so important, and looking at some of those key critical success factors. So before we launch the panel, I'm just going to ask each of you to do a very quick introduction, if you don't mind. Just 30 seconds each, just outlining who you are, what your fund does, but also what you do in terms of where your fund sits in the overall investment landscape. So I'm going to start with George, if you don't mind.
All right, thank you very much, Jordan. Hi, everyone. Good morning. I'm George Menzer. I'm a principal at Sure Valley Ventures. We are a seed stage venture capital firm investing across the UK and Ireland. We've been operating since 2017. We invest into disruptive B2B software companies across AI, cybersecurity, immersive tech, and spatial computing. We typically invest where companies have been able to validate their product initially in market, so they usually have paying customers. Myself, I head up Northern Origination out of Manchester, so we do invest across the UK, and it's a very big part of our strategy and thesis to make sure that we don't just invest in London, Oxford and Cambridge, but we also distribute capital and help scale businesses in the north across the UK.
Thank you very much, George. And Jess, welcome.
Good morning, everyone. I'm Jess Jackson. I'm an investment manager at Praetura Ventures. We are a northern-based VC. Since 2019, we've been investing from an EIS fund, which focuses on seed to Series A scalable tech and health SaaS businesses. So ticket sizes of typically 750 to 2 million. Yeah, I'm very much aligned with what George said there. Most of our businesses are northern as well, which is something we're incredibly proud of. Since 2022 as well, we've had the Greater Manchester and Cheshire Life Sciences Fund. So we invest in life sciences businesses that are based in those regions with tickets of 50k up to about 1 million. I sit on that fund, so my role is to kind of generate and transact and also portfolio manage across that fund.
Thanks, Jess. Natalie, welcome.
Welcome, hi. So I guess I'm the odd one out on this being a debt funder. So my name's Natalie Boswell. I work for Lloyds Bank. I'm the Regional Development Director in the North East in Yorkshire. So very much a northern focus, which I have in common with the other panellists. So most of you should know Lloyds Bank. So I'm here from the commercial bank. Obviously, we're a big organisation. We have an equity arm, which is LDC, Lloyds Venture Capital. But I'm here just to talk about debt today. So we are the UK's largest digital bank. We're about 252 years old, so really old organisation, which is a bit of a juxtaposition to being the largest retail bank, the largest digital bank, but it's been a journey. And about 1 in 5 businesses bank with us, so a significant market share, and that's about the same in the north. It's about 19.4%. So we're a debt funder. We're what's called a tier 1 debt funder, which is to do with our banking license. And that's essentially any high street bank, or most of the high street banks, where that's the level of regulation. It's the highest level of regulation that we have because we take customer deposits. So money that individuals hold in their bank account, we ring fence that and we really look after it. And that dictates on the other end in terms of how much we can lend and the criteria that we lend against, which I'm really happy to speak more about and try and break some of those barriers down, pair the poll.
Wonderful. That's fantastic, Natalie. Thank you very much. And Helen, delighted to have you on the panel as well to continue some of those conversations around how we can increase this agenda and also unlock that potential as we talked about earlier as well. So thank you. So I'm going to kickstart with yourself, Jess, if you don't mind. And I guess you've all actually touched on it slightly in your introductions there, in terms of the right type of funding at the right stage of a business. So I'm wondering, Jess, if you could maybe just give the audience a bit of an overview in terms of, what types of funding is right for what type of business, thinking about sort of pre-seed funding, venture capital, grants, debt and equity, if you don't mind, Jess.
Yeah, absolutely. So I was just going to touch very briefly on kind of the 3, I guess, key funding sources that I typically, interact with. And I can't speak on debt with any authority whatsoever, so we'll leave that in Natalie's capable hands. But I'll touch on debt, equity and grant funding. So, typically speaking, debt tends to be available to businesses that are already making money. It's about using established revenue or indeed assets as collateral, and you lend money and then pay it back over time and pay interest. A lot of businesses that probably George and I will deal with on a day-to-day basis don't actually qualify for debt. These are high risk, mostly tech businesses with a lot of intellectual property, but actually nothing that would probably work as collateral for a bank. So the kind of funding that they will tend to look at will be equity and grant. So equity at its most basic level, just for anyone listening who's perhaps not aware of that, that is giving away a portion of your business in exchange for capital. So that much longer term view that an investor takes in getting that back. That could take the form of lots of different other investor types who look at different sections of that business life cycle. So we've already touched on some of them on this call already, with your angel investors, for example, get involved very early in a business's life cycle. Moving on to venture capitalists like George and myself, who will look at businesses that have maybe got an early product, perhaps early revenue, or indeed, they're looking to expand into different markets. And then you've kind of got your bigger players like private equity who are really looking at, bigger scale and obviously much bigger tickets. What's quite interesting, I think, to a lot of businesses, especially who are, you know, playing with innovative technologies, is grant funding. These are often, not always, but they're often, you know, public pots. So, you know, I'm sure everyone on the call's heard of the likes of Innovate UK, NIHR, Wellcome Trust, etc. A lot of these are kind of focused around life sciences or deep tech and things like that. But, you know, this funding is available for businesses, and it's generally it might be casually referred to as free money, although sometimes it does have a match funding component to it. But these are really, really helpful for businesses to deliver innovation projects without having to dilute, or indeed, you know, they might not actually be able to raise that equity investment just yet in their business. So it's a way for them to kind of advance their product and ultimately benefit the economy as a whole. So it's just a very quick whistle-stop tour, and I'm sure there's lots of other subdivisions there within, but I think that's a quick overview for everyone listening.
Yeah, absolutely, Jess. That's fantastic. Thank you very much. And we're going to come into our conversation a little bit later across the panel around actually how we look at those opportunities and how ESG and DEI actually are included within sort of those funding streams and how it is best worked through the process as well. George, I'm going to come over to you if you don't mind as well. And I'm just really keen to find out from yourself, you know, how does a founder who's looking to raise investment and thinking, you know, really about the type of funding that you offer through your fund, how do they make their opportunity stand out? And what are some of the key areas of interest to an investor when they're looking at an opportunity? So what are you really looking for as you start to digest what an opportunity looks like, and actually, is it right for your fund?
Some very good questions, Jordan. I can take it in terms of how we look at things and then broaden it out. I think for ourselves, as tech investors, we're looking at teams that have a hypothesis about a market problem, and they have been able to validate that they have a solution that solves that problem typically for a set of customers that are experiencing that problem very acutely. In terms of founding teams, what we typically look at in terms of profile is what about their background or that their history gives you confidence that they are well placed to solve this market problem. So what experiences have they had in their professional career? You know, what IP have they developed previously? Have they been a founder before? Have they worked in a large organization that's related to that particular market problem? These are some of the questions that we ask in the very early stages of looking at founding teams. I think in ways in which founders can seek to stand out to venture capital firms in particular is you need to be solving a large enough problem that it is of interest to the venture capital business model. So venture capital works generally on the power law principle that, you know, one or two companies in a portfolio of, let's say, 10 to 20 companies are going to generate the vast majority, maybe 80, 90, 95% of the returns of that portfolio. So typically most investors want confidence that the founder that they're going to invest into has the potential to scale to the value equivalent to the size of the fund. And those are the kind of key questions that we ask as we go through the process with founders. Every fund has a slightly different model. It depends on their actual thesis. Every fund has their own thesis and sector in which they focus on. You know, some funds do have a specific thesis on diversity, inclusion, and equality. Some have it based on sustainability. Some of it's on life sciences. I think I always say to founders, make sure you research and do your due diligence on the investors you're approaching before you try and pitch to them, because you need to make sure that you're aligned in terms of your vision and in terms of what you seek in terms of long-term outcomes. So those are some of the things that I look at.
Yeah, George, I think that's a fantastic overview there. And I think it's key, you know, thinking about that first poll question that we've just had, how do we break down some of those barriers? Education is absolutely key. And you've highlighted some key points there, which is around those education, you know, initiatives, and also how to be ultimately prepared to meet those investors, and really what comes through as being super important. And I guess one of the key things that you highlighted there as well, George, was around actually being able to present yourself as the right person to be running that business with the right skill set and experience. And I think, you know, that's a technique in itself, is to sell yourself really well to an investor. So those education points are super key. So thank you for that answer there, George. Helen, I'm going to come across to yourself now as well, and I'm just thinking about, obviously, you know, some of the points that you outlined in your fantastic keynote this morning around, obviously, you know, positive correlation between diversity in a business and it returns. And obviously, you'd mentioned 35% of businesses perform much better when they have a diverse founding team. I just would you just mind extending on that a little bit, and explaining to us why diversity is a key consideration, particularly on the governance of a company? I know Tony mentioned this in his opening as well, but why is diversity a key consideration when evaluating the governance of a company?
Yeah, thanks so much, Jordan. And I think, going back to my earlier point, you know, when we concentrate on business results, and the impact that we can have on the performance of the company is when we can make the biggest difference in terms of making sure that diversity is embedded in everything that we do. But I mean, there are some very strong business arguments as to why this is important and why it should be embedded in the governance of an organisation, particularly when you're looking at it through an investment lens. So as we've already said, we know that diverse teams are more likely to deliver results. And actually, Forbes have said that figure is 60% more likely. I mean, it's not a small number, is it? So, you know, these are significant figures, and ones which can have a huge difference to the returns that we would see in a portfolio. I was also really interested in that stat that I shared earlier as well, around the fact that diverse teams are likely to make better decisions in 87% of cases, which means that they're more likely to be resilient when it comes to those headwinds, which we know all businesses will face at some point, and that they're more likely to have longevity as well in terms of continuing to exist through some of those headwinds. But I think it's also important to remember that with diversity comes diversity of thinking. So creativity and innovation are required to make sure that a business continues to evolve, particularly in the fast-paced markets that we're seeing at the moment. So we know that that can create that sort of innovation spark and the continuous innovation iterations that are required for business success and for resilience as well. So, you know, it is fundamental when you're starting to look at governance. You know, these are some of the things which can underpin some of the major factors or foundation points that will ensure a business success in the long run.
Yeah, absolutely, Helen. And again, you know, that, like you said, that 60%, it's staggering. You know, it makes a real big difference, you know, when you think about performance, and particularly going back to what George and Jess have both mentioned there in terms of what they're looking at that venture capital stage in terms of performance and metrics as well. So thank you for that there, Helen. Natalie, coming across to yourself, if you don't mind, and thinking about particularly what you would be looking at within Lloyds Bank, what are those key strategies do you want to see in a business plan which shows that a business is ultimately committed to EDI? And why is it so important to see that presented in the business plan as well? And how does that essentially make a company more sustainable?
So if we strip it back to basics, any kind of lender or funder, they balance risk and reward, and we'll get to a point where this stops being a nice to do that we have 3-letter acronyms for, and it will just become the standard because of all of those stats that Helen called out earlier. Non-diverse boards and diverse founders have better financial outputs. You know, the businesses perform better from an investment perspective. And that will start to come through, and we'll see that risk reward start to change a little bit. So thinking around a business plan, from a debt perspective, there's hygiene factors, which I've already spoken about a little bit, and the other panelists have already covered when we consider lending. So, and these aren't going to change as long as we're in a regulated environment, which is probably going to get worse, not better. These things are not going to change anytime soon. So the number one is, can the business afford to pay us back? And that's different to equity, because that is, can the business afford to pay us back right now? Which is a little bit different. And that's a stressed interest rate because of what we've just seen in terms of how interest rates can increase so quickly. And as a responsible lender, we have to make sure that we're not lending to businesses that cannot afford to pay us back. We then look at what security is available, and that depends on what kind of debt funding you go to, depending on sort of what level of security that you need. So there are government bonds and government security that's available, so through the Northern Powerhouse Investment Fund, which is through Mercia. So there's different levels in terms of what security is available. And then we look at, in no particular order, as the other panelists have said, around the management team, what capability do they have, what experience do they have, and we're getting involved later on in the business journey, so more at the sort of maturity or that second growth phase. So there's a bit more of a track record rather than like a CV, I guess. The recent change, which is a bit less traditional and a bit less boring, is the real weight that we put on the region, essentially, and the impact that the business is having. So my role within regional development, which is only about 2 years old, which is crazy because it feels like I've been doing this for ages, is a real change. We got a new CEO around 2 years ago, and he's a massive advocate for equality all across the UK, across different communities, across different ethnic backgrounds, gender backgrounds, and that is really now ingrained into our strategy more than it ever has been before, which created my role. And regional development is really around how we can work with the public sector, the private sector, other funders, to increase access to finance in the regions across lots of different businesses. And we're using our balance sheet, the size of our organisation, the people that we have, our convening power, to proactively support these businesses that are committed to EDI and sustainability. We've put our money where our mouth is a little bit. It's still an early stage. This is relatively hot off the press, but we've launched our Regional Impact Fund, which is a pot of money, which we're going to take a higher risk on, where there is a regional, a social, and environmental impact to do so. So thinking about that risk and reward, we will take a higher risk for this triple bottom line reward. So yeah, Lloyds Bank or private organisation, we will make a profit, has to be financially viable. But is there a regional impact? Is there a social impact? Is there an environmental impact? And this is pretty new, but that is where the market will go.
Okay, and Natalie, I guess obviously some of the key points that you've just highlighted there came through quite strongly in the keynote this morning around those collaboration points, the bringing together public, private, stakeholder initiatives, you know, to make this an actual success. And I guess as well, what we're starting to see here in some of our responses is there is a true golden thread running through this. When you're evaluating that business plan from a debt perspective, they've got to be performing, they've got to be able to obviously pay back the money lent to them quite quickly, rather than it being held till the end from an equity perspective. And again, that correlation goes right back to the results of actually companies perform better. Obviously, when there's an increased diversity and inclusion across the board, and actually, you know, from a debt perspective, you need to see those results to see them that they are performing. So thank you for that, Natalie. Jess, coming back over to yourself, and quite similar question, to be honest, and particularly thinking about, obviously, you know, the Praetura venture process. And I know, obviously, you're a huge advocate for diversity and inclusion yourself personally, Jess. But how do you think about it, diversity and inclusion, in your overall investment process? We'd heard Helen talk a little bit about that in the keynote as well, around obviously how VCs need to be doing more, need to be obviously, you know, making it fundamentally important in the process, in particular. So it'd be good to hear from you in terms of how Praetura looks at that.
Yeah, absolutely. So I mean, I think it's really important that we look at diversity across all stages of the investment process. And I think, you know, as Helen sort of spoke about, you know, VCs have to have good governance too, and, you know, look at the makeup of its own team. And that's not just the investment team too, it's sort of right through into all those levels of seniority. And we could, you know, we could talk a long time about that and some of the kind of barriers that are very apparent in the finance industry around that. But, you know, we're incredibly lucky in Praetura to have a very diverse investment team right up to director level. And, you know, we're working on the board point, but, you know, it's something that we have very open and transparent conversations about. I guess to the deal process, you know, as I highlighted, we've got to think about what it means in terms of how can we apply that EDI lens. So, you know, right from how do we source opportunities? So it's all well and good saying we're completely, you know, unbiased and transparent, but if everyone who comes in your door, you don't do any kind of outreach into different sort of founder communities or different regions of your kind of geographical footprint, the people who come in your door are probably all going to look the same. And I know the BBB published some excellent research on this a few years ago around warm introductions, and, you know, they tend to be led by men because of how networks tend to be built. So, you know, you've not just done all of your work if you say, great, everyone comes in through the website. It's what you sort of do with it afterwards. So obviously Praetura does a hell of a lot of work in its marketing department, making sure we go out there, we speak at everything. So anyone who goes to events probably sees Praetura and some guys. You know, we really want to make sure that we get to talk to all founders, even if they're too early for us, and sort of build that, foster those relationships and make founders feel like they can approach us at any given point. And, you know, that's something that we're really proud of in how we interact with businesses. Obviously, it goes without saying as well, you know, we want to give all businesses that come through the door a fair shot. And, you know, we very openly kind of discuss deals and, you know, challenge one another. You know, it's ridiculous to claim that anyone doesn't have some form of bias. So being really open in how you discuss deals and how you're assessing teams and so on is critical to kind of spot your own behaviours, I suppose, and challenge and correct them. And then I guess we'll go, you know, you go more into kind of your much more formulaic processes around due diligence and your investment committees. And, you know, we talk about ESG issues as and when they come up, and we actually, rather than dealing with it by exception, we have kind of standing placeholders to say, you know, there's no issues, or actually, you know, this health tech business is doing a great thing in terms of healthcare inequality and dealing with issues in the NHS, for example, but actually it produces more single-use plastic. That's still a problem, and how do you sort of weigh that up and balance that? And you know, a lot of these kind of conversations aren't always binary. There's a dialogue to be had and a journey to go on to support the business. And then I guess finally, post completion, you know, there's still a huge role for us to play on the boards of businesses that we invest in, not just on a single business level, but on a whole portfolio level. So, you know, we recently did a survey to sort of understand not only what is the snapshot of kind of the gender mix or the ethnicity mix of founders, but where are they at in terms of considering their like readiness for a lot of ESG legislation, because the further up the kind of finance stream you go, the more emphasis is placed on this, or it actually becomes mandatory. So, you know, businesses need to kind of start to get ready for that. And, you know, 45% of our portfolio said that ESG was a major priority for them. And actually, it was quite interesting that a subset of those were saying, actually, maybe not having a strategy on this is impacting our ability to get clients, or actually it's impacting our ability to attract talent. So I think it's kind of a good thing that, you know, this adoption, even if someone doesn't want to adopt it, they're probably going to be forced to have to adopt it to remain competitive in the market, to even grow and, you know, hire people, which is a key thing that all businesses need to do. So in summary, you know, we think about it at every stage of our deal process. It's a constantly evolving conversation. We iterate our processes all the time. We iterate how we talk about EDI all the time, but I think that's the best way to do it, because you constantly keep that dialogue alive and constantly make iterative, positive improvements.
Yeah, absolutely. And I often use the term as well, Jess, that you don't know what you don't know. And I think it's super important to do that community outreach and to embed as an investor, as an organisation into those communities, because we've got to showcase how this industry works and this landscape works. And there's some fantastic organisations that don't know that there's these potential funding routes and certainly that support out there to get those businesses where they need to be, but also not just the support once the funding's gone in, as you've rightly said there, the support thereafter to ensure that that ESG strategy is fundamentally played throughout. So thank you very much for that, Jess. So I am conscious of time, and that brings us to the end of the panel session. I think we could have actually extended that by another half an hour, but very keen to obviously keep the event as brief as possible this morning. So go on, Helen.
I was just going to mention one quick thing before we close off, which is a bit cheeky, I know, but I would just recommend also that everybody takes a look at the research that Ada Ventures have published this morning around diversity in VCs in particular. But they have a really good stat in there about diversity washing, which is just highlighting the fact that whilst a lot of women have leadership titles inside organisations, they don't always have a shareholding. So I was going to mention in my point that I think it's really important in the governance just to check that shareholding point around diverse founders. Yeah. And I know in Lifted Ventures, we've decided that a diverse founder needs to have a 20% shareholding as a minimum, because we're at early stage as a commitment to that. So, you know, I just highly recommend that everybody takes a look at that. It's actually on LinkedIn today. Chet Warner shared it if you haven't seen it already.
Brilliant. Thank you, Helen, for that. Thank you. So thank you, panelists, and I do hope you stick around, hopefully, for some Q&A right at the end of the session. So that now brings us on to our second poll of the morning, and this poll is looking at that next one. So poll 2 is, which key method should a founder consider making their opportunity stand out to investors? So should they think about a strong founding team with complementary skills, a clear market opportunity, or also should they be able to demonstrate ESG and how a business impacts on society as well as the environment as well? So we've got 3 options there to think about. Which key method should a founder consider when making their opportunity stand out to investors? So we've probably got about 25 seconds to complete that now. Okay, we're just going to gather those results. Okay, oh, very clear. A clear market opportunity that demonstrates product and market fit. Absolutely. Followed by demonstrating ESG responsibilities, and then finally a strong founding team. So thank you everyone there for that engagement. Okay, that now brings us on to the next part of our agenda, and I'm absolutely delighted to be joined by Henrietta Boyd of HaloCycle, who's actually gone on to raise a significant amount of investment. And we're going to hear a little bit about how Henrietta navigated her way through the funding process, but also how she's overcome some of those challenges, where the advice has come from, and also how she addresses EDI in her business also. So welcome, Henrietta.
Thanks so much, Jordan. It's great to be here.
And so good to see you again as well.
You too.
So Henrietta, obviously you've heard quite a lot there in terms of some fantastic statistics and obviously some really great overviews in terms of how our funders are monitoring and assessing EDI as part of their investment processes, and certainly as part of actually lending funding to organisations. And just to kickstart our conversation this morning, I'm just really wanting to find out from you, Henrietta, a little bit about your journey to raising investment. Obviously, you've successfully raised investment recently. And I also want to hear from, obviously, how you considered your investment strategy, and particularly, obviously, as an early stage organisation as well.
Yes, well, Jordan, a lot of it wasn't deliberate. It was kind of what happened. So we founded the company in January 2020, which was spectacularly bad timing. So we were working on solving the plastic problem, and we were due to do some test work in the lab at Nottingham University during the week of the first lockdown. So we thought, never mind, we're perfect for grant funding. We will turn our attentions to seeking some grant funding. And we wrote a lot of grant applications. So we wrote one and we scored quite well. So we addressed the feedback and we wrote another one and we scored a little bit better. So we thought, okay, it's time for professional grant writers. So we paid for the professional grant writers and applied for another grant, and we scored worse than we'd scored on our own. So this kind of went on for quite a long time. And one of the issues with writing grant proposals is that it actually stops you getting on with what you're trying to do. It stops you getting on with the business. So we reached a point and we said, right, that's enough. We're going to raise some investment funding. And we were really lucky because the chairman of our board introduced us to SFC, which is a Startup Funding Club, which is an SEIS funder. And we got some investment from SEIS, who brought along BBI, British Business Investments, which is a subsidiary of British Business Bank. So we had some really great people on the cap table from very early on. And then we used that funding to validate our technology and to kind of consolidate our IP, which then put us in a better position, much better position, much stronger position to get some grant funding. And then at that point, that's when I met you. And we were kind of established, but very early stage. We had some IP, we'd validated the technology. We had a massive problem to solve and a big network of people who were kind of suffering from the problem, which is plastic waste. And then you came along and you had the Innovate UK investor partnership opportunity for us. And I think kind of matching a grant with investment is really helpful to everybody, because the fact that you're getting a grant gives the investors some comfort, and the fact that you're getting some investment gives the grant awarders some comfort. So it's not easy. It's not an easy win. It's not easy doing the kind of grant compliance. But if you've got someone like you who kind of knows the landscape and how it all works, and you had direct connections into Innovate, and it was a bit more of a backwards and forwards with us than just a kind of, you know, it wasn't just a grant application. You send it in, you wait 3 months, and then you get a no back. There was a little bit more of a backwards and forwards, which was really helpful to us. So I think so our funding journey, everybody says it's hard, and then it's really hard. But I've got a quote here which says, it's from an American writer called William Feather, and he said, success seems to be largely a matter of hanging on after others have let go. And I think there is some truth in that. It's tough, but you just have to kind of keep going. And contacts are very important.
Yeah, absolutely, Henrietta. Just tell the audience a little bit about what your company does and why obviously you're focusing on sort of equity and grant investment rather than the debt side.
Yeah, so we're actual heavy technology. We're recycling PVC, which is a type of plastic, and it's not recyclable by advanced recycling processes apart from by us, because you get an acidic byproduct, but we've got a way that we can handle that. So we are a long way, because we're actually building industrial stuff. It's a long way from idea through to when we're going to have some revenue. So we're not suitable for, as Natalie said, we're not suitable for debt funding because we don't have any revenue. Yeah. So we're too early for debt funding. I mean, later when we've got plants up and running and making revenue, that would definitely be an option. But for us, not yet. So we're very early stage. We've got a kind of plan laid out in front of us, but we are early, which is why we had, you know, some founders investment and then some equity investment.
Just in terms of, obviously, because we hear quite often as well that, you know, that obviously there is some startup loans out there, so there is a small element of debt at the beginning. Did you guys take on any startup loans or anything right at the front end to support in research or just operations?
We didn't. We looked, I mean, we really tried to map out the funding landscape and we looked everywhere. The business is registered in Hull, which is where I grew up, and Hull's therefore kind of meaningful to me. And we tried everything like Grow the Humber, just all sorts of things where we thought there might be some loans or funds or grants or help. But it was quite hard until you kind of get your toe in the door. It's hard to find that kind of finance.
It is. And I guess as well, Henrietta, just in terms of that, you know, it's quite important as well that perhaps you have, you know, some guidance right at the front end to say, these are all of the opportunities that are available to you. This is what your business does. Potentially, you should look at this type of funding. Going back to that poll question number 1 about some of those barriers and challenges, and obviously education being the result. Do you think if you'd had that type of support right at the front end, do you think it might have changed your journey slightly or not?
You just have no idea what you don't know at the beginning. You have no idea. So that, I think it would have been useful for us. And the more you carry on along your journey, the more you realize there is a lot of support out there, but it's just not that easy to find in the beginning. Yeah. Because you've got this great idea and you're driven to, well, I mean, speaking from my point of view anyway, you know, we had this great idea and we thought we could do it. And we hadn't kind of thought, oh, we're founding a company. Which way do we do it? We didn't sort of build it in order to get investment. Yeah. So if there had been some advice, it would have been helpful. Yeah.
Absolutely. And then coming back to obviously the successful elements, obviously you successfully received the Innovate UK grant, which I was able to luckily support you on, but also to match fund that, align investment to that was angel investors as well. And we were able to help you raise angel investment on the other side to align to the grant. Just wanting to touch a little bit more in terms of sort of those investors' appetite and what was it that really stood out to those investors and seeing your opportunity as something they want to invest in. And I guess also as part of that, how important was, you know, ESG and EDI obviously included in your strategy? And were your investors quite focused on some of those elements?
Really good question with loads of parts to it. So if I forget to address any,
don't worry, I'll come back.
Yeah. So we did set ourselves up right from the beginning as a B Corp, which was really helpful because it helps you put policies in place and it helps you structure yourself in a way that your business is for good. Mm-hmm. So that was a very, I mean, if anyone's just, and all the changes that you need to make, like you need to make changes in your articles of association. It's so much easier to do that right at the beginning when there are just a couple of you. So we found that really helpful being a B Corp. We've got investment from 2 angel funds. One is the Green Angel Syndicate and one is SFC. And the Green Angel Syndicate, as it says in the name, are interested in green investments. So I think, and also everybody knows about the plastic problem and everybody wants to solve it. And everybody, you know, the more you hear about it, the more you see it, the more kind of guilty you feel for using plastic, single-use plastic particularly. Mm-hmm. So I think we had a very big problem to solve that everybody is slightly invested in anyway. So I think that was helpful. And I think it's, you know, the ESG portion of what we're doing has been really important.
Yeah, absolutely. And I guess also we were talking about it in the panel session as well, Henrietta, around obviously right at the end there about obviously how diversity is particularly obviously across the board. You know, when you senior executive founding teams, how does your board look and how does your founding team look in terms of, you know, diversity and inclusion?
Yeah, so
dare I ask?
Yes, no, that's fine. Our founding team is 50-50, so there's John and myself. So, and then our chairman is a man. So then we moved from 50-50, but then we've got another director who you know, actually, Wendy Furness, who's part of the Women Angels of the North. So we're now 50-50 again, which is great. And Wendy did point out some of the stats to me that have been given today, that businesses with female directors do better, you know. So not just from a kind of, but from a so from a bottom line and business perspective, it does make sense to have a diverse board of directors and founding team.
Absolutely.
And I think so. You mentioned earlier that you are Northern lasses. Well, I'm a Northern lass, and I think Wendy counts as a Northern lass. So our north-south divide is 50-50 as well.
Which is fantastic, absolutely, Henrietta. And I guess as well, obviously, you know, you mentioned the B Corp certification that you've got there, and it has been, you know, I can remember when I was obviously helping you raise investment, I do remember having some of those conversations with some of the investors that did come into the opportunity, you know, and they were particularly asking around, you know, what's the business doing to be, you know, yes, they're a sustainable business because of what they're offering, but what are they doing internally to be more sustainable? How are they addressing ADI? It was something that was super, super important. And I guess particularly to obviously Wendy, who did invest in the business as well. I guess, you know, there's probably founders sat in the audience today, Henrietta, which is probably thinking, it seems like it's quite a long process and a lot to go through a B Corp certification, or to ensure that they're covering off some of those fundamental points around, you know, having ESG as part of their business strategy, not just something that sits on a shelf, something that is embedded throughout. What would your advice be to some of those founders who potentially don't have a co-founder, they may be sole founders and they're needing to do this on their own? What would you say is some of the key priorities that they should address that may not mean that they're just running their business, just concentrating on that? What are the key areas that they need to address?
Well, I would definitely say to even a sole founder to have a look at the B Corp setup and talk to them, because they're really helpful, and they just help you build your foundations in a way that means your business is for good. And they help you, you know, they help you write your, so we have a kind of suite of policies, which I don't think we would have yet if we hadn't set ourselves up as a B Corp. So I would say talk to the B Corp guys, because they're really helpful.
Absolutely. And how long did that process take you, Henrietta?
I think, so I had a girl working for me as an assistant, and she worked on it. She wasn't full time, and I think she worked on it for maybe nearly a year.
Right.
But obviously it was an on and off type of thing, and it's more of a kind of building blocks process. So you just put the blocks in place and you kind of get points, and when you've got enough points you kind of get more questions opened up. So it's just a really good way of building from the beginning in a sustainable way.
Yeah. Okay. And just going back to the grant applications, okay, because obviously you mentioned there that there was a lot of grants that you applied for, didn't get them, okay, but obviously when it came to the Innovate UK Investor Partnership grant, that was something that you were able to successfully, you know, be able to attract obviously the grant funding for. But I guess thinking about obviously what the topic is about today in terms of unlocking that potential and those critical success factors to a diverse founder being able to raise investment, how important, actually, I guess, how what I'm trying to say is, in terms of your applications, how important was it for you to ensure that you're answering those questions? Because I'm thinking there'll be a lot of people in the audience today who are thinking about applying for grants or are currently going through a grant application, but need to ensure that they put the best foot forward in terms of what goes into that grant application. And obviously there'll be a large proportion which is on about the opportunity, what you're raising the money for, the impact that this grant fund can potentially have on a business. But how important was it to address some of the fundamental points that we're talking about today within those grant applications?
Well, it's really interesting question, Jordan, because some of the things that we've been talking about today are, you have to answer the questions, but they're not scored in your application. But I think so I think they are important, but they're not specifically to do with your business opportunity. But as we've been hearing today, having a diverse team gives you a better business. So, and I know that lots of the grants are in the process of changing, and the investor partnership grant is actually an example of that, because I think the smart grants are very difficult, and the investor partnership was, you know, I think was just a way of kind of having a bit more interaction. So I think it is really important, but I think it's probably not fully captured in the grant application system yet.
Mm-hmm. But it needs to probably be, do we think?
I think so.
Yeah.
And I think there are lots of kind of smaller grants that you know, maybe local councils or whatever may offer. And they might be specifically targeted to, say, a woman founder, or, you know, geographically targeted. So I think in those scenarios, rather than the bigger Innovate UK government grants, I think it's really important.
Fantastic. And just thinking about, again, obviously your round of investments. So obviously, you know, you successfully got the partnership, the investor partnership grant through Innovate UK. You successfully sourced angel investors as well. I'm guessing, obviously, again, there'll be members of the audience who are just, you know, encroaching on that space now and really thinking about how they're going to potentially raise funding for the business. What advice would you give those organisations and those founders in terms of where to go to find investors? You know, what was your strategy around going to get the investors? As you rightly said, you don't know what you don't know. And sometimes, you know, entering this space, it's a minefield. So what would you suggest to some of these founders that they need to consider if they're thinking about going to raise investment, and where do they go and find those investors? So
I think that we missed the trick because we didn't tap into the whole supporting startups network. So I would say definitely have a look for that. Here near us in Hull is a group called C4DI. They're all over the place, and they have they have a premises. You can have an office. You can meet other founders. They put on really good events. And also, I would say you have to kind of do everything. You have to go to all sorts of things. You have to go to events. You have to speak. You have to present. And things lead to things, but unfortunately, you never know which things are going to lead to the things. So you have to kind of keep on doing everything. And I went to a North Invest. I think it was a launch of something, and it was kind of quite far away.
North, wasn't it? Sustainable.
Yes, that's right. And it was quite far away, and I had to get my daughter from school, and she had to come with me. And I was presenting, and it was quite difficult to get there, and it led to all sorts. And you just have to make the effort and keep getting yourself out there.
Yeah. Do you know what, actually, Henrietta, you've made a really valuable point there as well around actually, you know, going through a fundraising process is very difficult. It's very time consuming. And obviously on this other side, you've got to obviously juggle being a parent as well and everything that goes with it. And it's quite normal to feel that stress and that strain. But, you know, putting yourself out there and getting in front of the right people does pay dividends. And actually, I remember your daughter being there and she seemed to have a fantastic time.
Loved it.
She did, absolutely. So you mentioned earlier in the conversation as well, Henrietta, that obviously, you know, thinking about what the future looks like for HaloCycle. Just to finish our conversation this morning, tell us what that next funding journey is going to look like for you, what you're taking into consideration, and what you're hoping to achieve by it as well.
Yes, well, we we had a board meeting the other day, and we think that we're probably going to finance building our first full-scale plant ourselves.
Right.
So we will be going out to raise more money to do that. Originally, we weren't sure whether we would do a joint venture with someone, and but we think we're going to have to keep going to really prove the concept and finance our first full-scale build ourselves. So we will be looking for more equity investment for that, because we're too early. We're too early. We don't have any revenue. We're too early for debt funding.
And I guess as well, thinking about that B Corp certification, and also how, you know, ESG is really embedded in your ultimate business plan, that will open up hopefully a number of other doors in terms of investors for you because of their investment strategy.
That's fingers crossed. Yeah.
Absolutely. Well, thank you so much, Henrietta. It was so fantastic to see you again, and I'm delighted to see the progress that's being made. And thank you so much for sharing your advice and your guidance for our audience members this week.
Well, thank you very much. It's been a pleasure.
No problem. So that now brings us on to our third poll, and I'm going to hand back to Helen, who is now going to steer the ship from here. Helen.
Hi, everybody. So we've actually got one more poll, Jordan. So
yes, are you wanting to launch into poll 3, Helen? Or do you want me to do it?
Yes, if we do that.
I'll do poll 3, no problem. Okay, so let's go into poll 3. And the next poll question is, where and what next? So a key next step for businesses, okay? So what is next in terms of what do you think you may want to do for your business, okay? So we're going to start the poll now, and you've got 30 seconds. About 10 seconds left. Wonderful. So we're going to gather those results. Wow, 50-50. So 50-50 in terms of the businesses here in the audience now, in terms of what does next look like for you. And 50% obviously have said they're going to look at startup loans, angel investment, early stage investment, and half have also thought about looking at business growth hub opportunities. Very similar to what Henrietta mentioned there in terms of that starting out support network. So, wow, I didn't expect that to be 50-50. So that's a fantastic result. So thank you, everybody. That's the end of the poll sessions. I'm now going to hand back to Helen.
Thanks, Jordan. Yeah, and that it sort of leads nicely into the last opportunity for some interaction. So we've got 10 minutes now for you to ask any of our panelists or our contributors today questions. Now, you just need to put those into the attendee question box. And I could see already that some people have commented that it would be good to make sure that we included information about early stage investment, pre-seed investment. So it'd be good to know specifically what your questions are in that area. So I could see, Charlotte, you put, can we comment on partner equity and pre-revenue early stage startups also? So yeah, if you want to ask a specific question, Charlotte, that'd be really helpful. And also Dilip J asking, can we give some guidance for funding for a company in its MVP stage and pre-traction stage towards equity funding? Again, if you could be really clear what the question is, we can put that to our panelists now. And a few people saying thank you as well. Judith Parry, so Judith, someone we know well. Judith, it's great that you've joined us today. Saying, George and Jess, thanks for all your valuable advice. So a specific question here for George and Jess, if they could come unmute and put their cameras on. Do you have, do your organisations publicly report on EDI and ESG credentials for your portfolio companies?
I don't think it's something that it's probably something that we should look to do. And I know we've had a discussion around, you know, almost like an annual report type sort of arena, I guess, in terms of saying, you know, this is the broad makeup of our portfolio. We are obviously signatories of the Investing Women Code, so we do submit data through that. And we're also looking at a number of other ESG related, what's the word I'm looking for, like accreditations that would also require that reporting. So, you know, once we've got that data, there'd be no reason why we wouldn't be in a position to sort of publish that on our website and be transparent. You know, our portfolio is incredibly diverse, and we're very proud of that. So, yeah, it's a fair question to ask.
And thanks, Jess. And George?
I think in terms of ourselves, similarly, we are signatories to the Investing in Women's Code. I think we also engage with, try and engage with other organisations like Extend Ventures. I don't think we've published it publicly yet, but I think it's something that we do publish to our LPs, such as the British Business Bank. Us is our relationship with them. I think over time we'll probably look to do that as we build out our portfolio. We're still 18 months into our UK fund, so probably the level of data points we have is not of significance in terms of data, but it's definitely something we'll be happy to be transparent about. And I think at maturity, our portfolio will reflect that we do care about diversity, and we do think it's important to have as a kind of constitution within your portfolio.
Okay, thanks both to George and to Jess there. I'm keeping all of our contributors on their toes today by asking specific questions that are coming from the audience. So we have a question from Charlotte, and actually I think, Jordan, I'm going to ask you this question. So the question from Charlotte is, any recommendations of how to think about splitting equity between partners and angels? I'm a solo founder and need support from two partners who are wanting to invest for equity, but I also need support from an angel for a slightly larger sum. Plus, I intend to do a small crowdfunding round. So lots of detail there. So Jordan, I wonder if you wanted to pick this one up from an early stage angel perspective.
Yes, absolutely, no problem at all. And I guess what we would probably look to do is have a look at the opportunity, look at the existing, obviously if you're co-founder, obviously you've got 100% shareholding in the business, but ultimately look at sort of what that funding journey looks for you now and potentially in the future, so that it doesn't become a little bit overcomplicated for those future funding rounds as well. But by all means, do drop me an email, Charlotte, and we'll have a look at the opportunity, have a look at what opportunities are on the table for you, and perhaps give you some advice around the best way to structure that between obviously the angels, the partners, and perhaps look at other opportunities for you as well in terms of grants, as we discussed earlier.
Yeah, and George, and just quickly, it'd be interesting to hear how important that is by the time it gets to you. So in that sort of Series A or seed round, you know, cap tables, how might Charlotte be thinking about this, which would help her in the future raising?
Did you mean me? I think you said Jordan, but
yeah, sorry, Jess.
Yeah, no, it's a good question. And as I was listening to you ask Jordan, I was honing in on the use of the word partner. It might have just been a different word choice, but instantly I was going, are these individuals / organizations actually putting money in? And I know this is something that I have seen before, whereby, you know, equity is given to someone who's been indeed, you know, incredibly helpful to you as an advisor. But, you know, as a founder, you've got to be incredibly shrewd and think, what is my long-term, you know, goal around raising capital for the business, and what shareholding do I need to have at the end of this, as Jordan has said there, you know, to make sure I'm incentivized appropriately. And I think that is probably a good word to hone in on here. So when I'm looking at a cap table, you know, a business may well have been through a few rounds of funding. And I mean, you know, just going back to Henrietta's kind of conversation there, you know, businesses have had to trade through a very difficult period, and sometimes that's meant they've had to make suboptimal decisions than they probably would have liked to make sure they can bring in that capital. And that doesn't mean there's not ways and means around it if we like a business sufficiently. You know, at Praetura, we're looking at one where the founders don't have a large shareholding, but we can look at growth options and option pools that we can work in such that they can have a better shareholding, and they'll be incentivized as well to stay around. So we want to make sure that founders have got enough skin in the game to kind of see out that growth. But obviously investors want to get a fair slice for their capital too. So I think Jordan's advice around working backwards from where you want to be is a sensible approach to take. Yeah.
Anything to add on that, George? And then I'm just going to pose one very short question, and then we're going to pass back to Tony.
Yeah, I think there's not huge amounts to add to Jordan and Jess. I think they've covered it off quite well. But one way that I was always taught to think about is alignment of economic interests. Investors are looking through the journey. So they want to see founders that are incentivized to grow the business, not just through salary remuneration. And obviously there's ways where you can retrospectively incentivize them, but ideally, to keep things clean, you want to make sure that founders have sufficient equity through different parts of the funding journey. Always be mindful of the levels of dilution as you raise. Broad strokes, the top tier Series A investors want the founders to have at least half the business between themselves as you begin to seek sort of Series A funding. So keep that kind of benchmark in mind. And you can also model it out. So you can start with, I need funding at this and this stage, and play around with different amounts of dilution and see what you come out with at the end.
Great stuff. Thanks for those answers. And then for our final question, we are being asked by DLIP again. I think that might be a surname, but it's difficult to tell from the way that's showing up in the questions. But anyhow, the question is, I'm applying for the Innovate UK Investor Partnerships SME Round 5. My company is healthcare focused, XR and AI related. The product's in MVP stage. Would anybody in the panel provide support for this grant? So that's quite a direct question, and there's going to be lots of caveats here, but just in principle, and what would the person need to do next? If we could start with you, George, that'd be great.
So we are an approved partner of that program. So in theory, we could support. There's obviously an investment process that you need to go through as an applicant. And we also need to make sure that your business aligns with our thesis around very disruptive frontier type technology. Us seed stage investors, we typically don't invest in pre-seed rounds. So there's also a consideration in terms of the amount of capital you're raising as well. I know Jess outlined how much the ticket sizes that Praetura does for what it's worth. Our minimum ticket is 750k and our maximum is 1.5 million initially. So in theory, yes. But the best thing to do if you were interested is to apply through our website, and we can take your application into consideration.
Great, thanks, George. And Jess?
Yeah, like Shore Valley, Praetura, we're also partners on the Innovate UK. I think I would agree with George. Having a dialogue with us is absolutely the way to go. We don't want to be in a situation where a business applies and jots us down as an investor when we've not had a chance to sort of look at it. At face value, without knowing exactly where your business is based, it could be a good fit with our life sciences fund. And, we can do MVP stage businesses, notwithstanding us being comfortable with, products, problem, solution, market, management team, all that other good stuff. So, yeah, like George said, I would encourage you to sort of reach out and mention that there's that potential co-investment opportunity, because that's absolutely what this is, and a great de-risking opportunity without diluting too much. But yeah, we can have a conversation about it.
Great stuff. Thanks, Jess and Jordan.
Yeah, I was just going to add on to both them, George and Jess's points there around obviously that co-investment element. So obviously at sort of MVP development stage, it's certainly worth having a chat with Jess and George, but also maybe looking at sort of angel investors as well to support in terms of this round. In terms of obviously the sector of focus, it feels like it does match exactly what the investor partnership program is wanting to back as well. And again, we'd be more than happy to have a chat at Lifted Ventures about this. And obviously, you know, the power is in co-investment rounds. So if you can work out, you know, a grant alongside some funding from a fund like Praetura or Shore Valley, for example, plus angel investors, that does make a good round of investment, particularly from an equity.
Brilliant. So thank you so much for all the people who put forward questions. There's a couple that we haven't managed to get to. So if those people who have put questions in, Rory and Laura, I'm sorry we didn't get to your questions. But if you want to approach us directly on LinkedIn or by the British Business Bank, do come to us with those questions. So I'm going to ask Natalie and Henrietta just to put their cameras back on, just while I round up our bit of the event today. I wanted to say a huge thank you to everybody who's been involved in the event. To Sophie and Delith and Sean for inviting us to take part in this today and pull this event together, to Xavier, who's in the background, who's been making the tech work, but also to our amazing panelists and contributors, so George, Henrietta, Jess and Natalie. I'm going to pass over now to Tony Greenham for some final remarks. So enjoy the rest of your day, everybody, and let's keep these important conversations going.
Thank you very much, Helen. Well, Helen has already made some thank yous. I'd like to reinforce those, but also, of course, thank Lifted Ventures and Helen and Jordan for co-hosting with us and running the session so brilliantly. It's been fantastic. I've really enjoyed it. I'm left with a couple of reflections, which was, firstly, I was chuckling at Henrietta's describing how achieving a 50-50 balance on the board reminded me of a recent panel on the future of journalism, which also achieved 50-50 diversity, but theirs was 50% of white male men, and the other 50% were white male men called Matthew. I'm not making that up. So I think I'm also pleased Helen called out the importance of allyship in making sure that we achieve better diversity, inclusion, and equality. And so I just want to end by saying thanks everybody for attending. Thanks for all your questions, and thanks for all the participants in what was a fantastic event. Thank you.